Welcome to Core Finance, where I'm delighted to welcome the CEO of Prairie Mining, Ben Stoikovich. How are you today, Ben?
I'm very well, thank you.
Right, we wanted to know all about the weird world of coal. Two types of coal, or there's a good coal and a bad coal, is that right?
Absolutely. So our projects are centred on coking coal, and coking coal is used exclusively in the steelmaking industry. So we're going to mine coal in Poland, where our projects are, to supply, for example, European car manufacturers. Steel is critical to our economy and to European industry.
So you are basically the backbone of the EU's manufacturing base, let's say.
Absolutely, and the EU actually recognises this because coking coal is designated by the European Commission a critical raw material for Europe, which means that there's not enough domestic production in Europe. For example, last year, Europe used 75 million tonnes of coking coal. 85% of that was imported from offshore.
Right, so your company should be in demand. Tell us about the assets that you have there in Poland.
So we have two projects in Poland. We have the Karski mine, which is in the very far east of Poland, and that is going to be a semi-soft coking coal project. It will produce 6.3 million tonnes per year at a very, very low cash cost of $25 a tonne. We have another project in the south of Poland called Debinsko. We acquired that late last year. That is a hard coking coal project. This is premium quality hard coking coal, and we can produce 2.6 million tonnes per annum at around $47 a tonne. And these would be the lowest cost coking coal mines in Europe, probably in the Northern Hemisphere, for delivered into Europe costing.
Right. I mean, one of the things about mining stocks for people who are not, people looking around for a mining situation, mining sector situation, they look at your company. First thing they want to know is what's the pedigree of the management?
Pedigree of management. Look, we've got hundreds of years of coal mining experience between myself as the CEO and our board members and our Polish management team. I started my career as a mining engineer with BHP Billiton. I worked my way up to be a coal mine manager in Australia. I then moved to the UK and became involved in investment banking and have directed billions of dollars of financing towards new mine developments all around the world. We have our senior project manager, Nick Edmonds, who worked with British Coal for 30 years and was a senior mining consultant internationally. He's built mines globally as well. Very importantly, we have a gentleman named Miroslav Taras, who is the CEO of one of our local Polish subsidiaries. He's a 30-year veteran mining engineer of the Polish industry, and he was a CEO of one of the coal mines which operates right next door to our Karski project. So he's probably one of Poland's most famous and successful mine builders and coal mining engineers.
So your team is, let's say, proven right on your back door.
Absolutely.
Right, and obviously the other thing with mining, you've got the management there, you've got the resource there. You need the funding. How are we getting on in that area?
So we've been very successful. We introduced a cornerstone investor to Prairie Mining back in 2015, and that's a London-based natural resources private equity fund called CD Capital. They invested initially $15 million, but have rights to invest up to $83 million. So we're very, very well funded for this preliminary pre-construction phase and for our study programs. But the really exciting thing for me is our strategic agreement with a company called China Coal. Now, China Coal are China's second largest coal mining company. They're a state-owned enterprise. But what a lot of people don't know is that they are the most prolific coal mine construction firm in the world today. They've built more coal mines in the last decade than the rest of the world put together. So in November last year, we announced an agreement with China Coal whereby they would fund and complete a bankable feasibility study for our Karski project. In return for them bringing a Chinese bank financing package for the construction of the mine, I will give them an EPC contract to build the mine. And you've got to put it in perspective of what's happening in China. 18 months ago, the Chinese government announced a moratorium on all new coal mine construction in China. So China Coal saw its pipeline of new projects diminish, and they're forced to go overseas and use their expertise and deploy capital.
So did that affect the price of the underlying commodity at that time? Absolutely.
So the price of coal bottomed out in around January 2016, and for coking coal it was $80 per tonne. Today it's trading at well over $200 a tonne. So certainly we saw a fall off in supply in China, which now drives the rest of the global market.
So that event is not one which it doesn't seem to have been appreciated in terms of the market's perception of your company.
Look, I think what's happened is prices came from a very low level last year. By December last year, they were over $300 a tonne for coking coal. And the market didn't believe it would be sustainable. But here we are nearly a year later and prices are still over $200 per tonne. What a lot of people don't appreciate is that during the very lean years, from 2012 to 2016, nearly 50 million tonnes of coking coal came off the international market. There were bankruptcies of mines in the US, there were closures of mines in Australia by companies like Glencore as they were attempting to limit supply and close unprofitable mines. A lot of those mines will not open again. So that is our opportunity, and that's why the supply side remains constrained and demand has risen.
And would you say private investors who clearly, I mean, they'll be looking at small companies like yours, and not that small, but smaller companies like yours, do you think in general they don't appreciate, let's say, the fundamentals as much as they maybe appreciate the management of a company like yours?
Look, I think our management pedigree is proven. I've explained that already. Yeah. I think the fundamentals of coal, the market's been sitting there waiting to see where prices settle, where does it stabilise at? And we've seen that now for nearly 12 months. And more analysts are updating their long-term price forecast. We're seeing consensus forecasts come up, and that will eventually feed into valuations. But it takes time, as with the start of any new commodity cycle.
Right, and while we're waiting for that re-rating, what are you doing on the ground? What's your roadmap for the next few months?
We're very, very busy. So currently our technical team is fully engaged with China Coal, completing the bankable feasibility study. That should be finished next month. Concurrently with that, there are negotiations with a club of Chinese banks who are putting a financing package in place. That's for our Karski project. For the Debinsko project, we're at a little bit earlier stage in terms of we've just finished a scoping study. We're going to move into the next stage of feasibility study. To do that, we have to complete some infill drilling. So we've been very busy planning that drilling program and getting all the permits in place.
Right, it sounds like you've got a lot on your plate. Would you always be on the lookout for further opportunities, further areas to develop?
Look, we're always open to good opportunities. We have our expertise, our niche is coal in Europe, but I can say that at the moment we have our hands full with 2 world-class projects, and I'd be really surprised if anybody comes up with better quality coal projects than what we have already.
Right, and so Poland is the centre of the coking coal area?
Absolutely, they're really the last major untapped coking coal deposits left in Europe, probably left in the Northern Hemisphere. They're proven. Both of our mines are next to existing mines that currently produce coal today. It's actually well-proven mining. It's not something new.
So you don't have to use too much imagination to work out what might happen next?
Absolutely not. And I think the key for me in terms of unlocking the upside here, our combined project NPV is $3.3 billion compared to a market cap today of less than $100 million. The key is introducing modern mining technology into Poland. The Polish industry is traditionally being controlled by the state. They haven't modernised equipment. They're still using Soviet-era technology and manning levels and organisational structures. What we've done is we've taken in a very Australian or North American approach. We can do more tonnages with less men, with more modern equipment, with more automated equipment, and that brings your operating costs right down. So we know the coal is there. We know it's already mined today profitably. We just want to do it bigger and better.
Well, we'll see how all that goes. Ben Stoikovich, CEO at Prairie Mining, thanks for coming in today.
Thank you very much.